Insurance is a means of protection from financial loss. It is a form of risk management primarily used to hedge against the risk of contingent or uncertain loss. An entity which provides insurance is known as insurer. An insurance company, an insurance carrier, or an underwriter, a person or entity who buys insurance is known as an insured. Is known as an insured or as a policyholder. The policyholder who hold all the policies of insurance. The insurance transactions involves the insured. The insurance transactions involves the insured assuming a granted and non-relatively small loss in the form of payment to the insurer. In the form of payment to the insurer in exchange for the insurer's promise to compensate the insured in the event of covered loss. It is the event that lost on that spot. The loss may or may not be financial or domestic, but it must be reducible to financial terms and usually involves something in which the insured has an insurable interest established by ownership, possessions, or pre-existing relationship. Something in which insured has an insurable interest established by ownership, possessions, or pre-existing relationship. The insured receives a contract called the insurance policy, which details the conditions and circumstances that environment provided by insurance company, under which the insurer will compensate the insured the amount of money charged by the insurer to the policyholder for the coverage set forth in the insurance policy is called the premiums. Premiums. If the insured experience loss, which is potentially covered by the insurance policy, the insured submit a claim. Submit a claim, it means that it give a complaint to the insurance company, to the insurer for processing by a claim adjuster, a mandatory out-of-pocket expense required by the insurance, which is not any person can be demanded by an insurance policy before an insurer will pay a claim is called deductible. or if required by a health insurance policy, a complement. The insurer may hedge its own risk by taking out reinsurance whereby another insurance company agree to carry some of the risk. But it is may or may not be possibility that occur in our society, especially if the primary insurer deems the risk too large for it carry. It means that there is may or may be not possible, nothing else. I explained it for again at that point where the amount of money charged by the insurer to the policyholder for the coverage set. That is the main point of the insurance. Fourth in the insurance policy is called the premiums. If the insured experience a loss which is by the insurance policy, potentially covered by the insurance policy, it means that it holds fully energetically the insured submit a claim. Insured submit a claim. It means it give a complaint to the insurer for processing by a claim adjuster. That means that complaint are given it accordingly that complaint are received. Okay, it means that it work on that policy which it demanded a mandatory out of pocket expense. It means that a person who not be obligate for expenses, so where it use where it gets their expenses, it's required by an insurance policy before an insurer will pay a claim. That claim is called a deductible. Deductible. It means as complaints are received by the insurance company. Every company required every policy of the insurer, or if required by health insurance policy, a complement. The insurer may hedge its own risk by taking out reinsurance whereby another insurance company agrees. It goes to the another company which required which it completed its requirement and agrees to carry some of the risk, especially if the primary insurers deems the risk too larger for it to carry. If they not, then person goes to another policy. It means that there will be complete every demands of that person who come to insure.